you're a home buyer, somebody or a young person looking to buy a home, you need a bit of a reset.
There is a possibility on the other side of this that inflation could actually be quite
Welcome
low.
back to Real Estate Mindset. Today's video is going to be absolutely bonkers. Now, the biggest question that so many people have is, will the housing market crash in 2024? Now, first, before I answer that, and we're going to go into an article, we're going to offer my own perspective. We're going to listen to the perspective of investors to see whether or not they believe we're going into a housing market crash in 2024. But I want to remind you that I believe that the housing market crash has already started. It has to start somewhere. And my definition of a crash is 15% loss from peak. That's my definition. Now, a universal definition of the stock market crashing is 20%, but this is not the stock market. We're talking about the livelihood of families where people raise their children. We're talking about the American dream. We're not talking about the stock market. So I think the housing market crash started when the Federal Reserve started doing quantitative tightening. It's just, unfortunately, remember what happened in 2023 in March. They injected $400 billion into the economy. That type of liquidity injection was massive, you guys. It kicked the can down the road and made the problem bigger. When you bail out the banking system, you bail out the whole economy because everything goes through the banks. And seriously, if you guys can, and I hate to say this, I hate to ask this, I know that I'm a YouTuber though, and I have to, please like this video, subscribe if you haven't already, shoot some comments below, hit some notifications, and please, you guys understand that I really appreciate you and I love hearing from you. And I really hope you guys are getting perspective. And the question that I get a lot is, what is the solution? Well, one of the solutions is taking my free home buying course that I put together. It took me a lot of time. And not only that, you guys, it's free. It's not free for me. I'm paying to have that course up so that people, so that consumers, especially first-time home buyers that really want to empower themselves, have a segue to do that. So again, that is in my description if you're interested in taking it. Now, this is an article from Investor Place. The question, will the housing market crash in 2024? What will happen to home prices as rates fall? So a few bullet points, guys, and then we'll really dig into this. Number one, with interest rate cuts on the way this year, many economists are laser focused on housing because it's way overvalued. Look at the PE ratio. I'm not just using my emotions. I'm talking about the data. Hello, right? Number two, indeed, while rate cuts will help ease mortgage rates, not everyone is on the same page over what will happen next for home prices. Number three, with home sales expected to climb notably next year, based on who? Fears of a housing market crash are all over Wall Street. So again, will there be a housing market crash in 2024, according to Investor Place? Now, to be clear, this outcome isn't the baseline scenario by any means. When rates fall, home prices normally go up as more buyers enter the market. And that's how supply and demand typically work, unless we're being manipulated and shut down and being lied to by literally everyone. While there are likely many would-be sellers locked into pandemic-era mortgages, there are also many would-be buyers waiting for conditions to improve before they jump in on a property. In fact, even despite the predicted fall in mortgage rate, reluctant sellers will still largely enjoy rates far lower than anywhere mortgages are expected to go this year. So they're saying that mortgage rates are never going to be that low again. And they should never be that low. They should have never been 2 and 3%. Plus QE, plus mortgage-backed securities being purchased by the Fed. Sellers are likely to remain reluctant to give up their low mortgage rates for a much higher one, so inventory will remain constrained. As more time passes, more homeowners may be forced to sell due to life events, so inventory may rise from the current anemic levels, but it's unlikely to increase much. That means that prices are unlikely to fall on a year-over-year basis unless demand falters. And I want to make very clear, this is talking about so far existing homes. By my own definition, we already have a crash in prices for new homes. And we already have a crash in prices in areas like Austin, Salt Lake City, Boise, areas around Phoenix. I think Las Vegas is really close. Dallas is showing cracks. San Antonio, Fort Worth are selling cracks. Sacramento is showing cracks. I mean, you guys, Raleigh. We go East Coast too. Raleigh, Myrtle Beach, Charlotte, very, very interesting. Atlanta, very interesting. So there's a lot happening, you guys. But we're talking about on a nationwide average for existing homes only. Listings will steadily show up and new home sales will continue to do well. Existing home sales will rise by 13.5% next year, the top cheerleader says. Most concerns about a rapid drop in prices stem from the fact that the Federal Reserve plans on cutting interest rates at least 3 times a year, which means the market knows there's turmoil. And it's probably from commercial real estate. Why is that important to you? Because if we have a commercial real estate meltdown, there's going to be massive rounds of unemployment, not necessarily from the commercial real estate buildings, but as a result of the banking system failing. If banks lose money because of the CRE meltdown, not only will construction workers and those office owners, have to do layoffs, but the banks will also have to do layoffs. But not only will they have to do layoffs, they will have to tighten their money lending. And companies need to get money from banks to survive. So if the banks shut down the money flow on top of the Federal Reserve already shutting it down, everything falls apart. In fact, if we don't have a bailout, everything also falls apart. And we already know that because of 2023. Everything was falling apart. We already had deflation in 2023. I know that because I covered every minute of it. So we already had all those things, but then they bailed out the market. And that's when my forecasting became wrong. I was doing great. I was hitting home runs during the entire year, 2022, and up until they did the bailout in 2023. And I'd been hitting home runs the entire time on new construction. But I am not so naive to think that the government can continue to try to bail out. I mean, that's a fact. But again, every time they do a bailout, the consumers are the ones who pay. That's why the rich get richer and the poor get poorer, because they're not bailing out us. They're not bailing out the consumer. How can they possibly think they can put the consumer in a position to continue to spend when we have quantitative tightening and inflation absolutely out of control? And people are like, oh no, inflation's going down. But we don't have deflation. People already couldn't afford at the start of 2023. And now prices are higher. Okay. Disinflation, it just means inflation's not going up as high. You guys, we have a massive problem with PE ratio and payment to income ratio. But you couldn't tell that from realtors, and from this article, realtors see a rebound for the housing market in 2024, spurred by lower interest rates. And remember, if you're wondering why realtors are saying, different things than what I'm saying is, just like these other companies, they can't afford to be honest. Okay. And they can't afford to think about it. They can't afford to change the perspective, because their job is to tell you to buy real estate. That's their job. And it's unfortunate that a lot of them will not be honest and will not be cautious. I mean, literally, none of them want to be cautious. And I know another thing that's very interesting. None of them want to talk about cutting their commission, even though it is a legal freaking requirement. And when I say cut, I say cut their commission. I'm saying cut their commission because everyone charges that 3% and 3%, right? So I'm saying cut their commission. But the reality is you as a seller or buyer, you can give them $500. Did you know that? Now you do. When mortgage rates fall, two things will happen. Firstly, buyers will enter the market looking to jump on property under stronger lending conditions. Secondly, sellers will likely take the opportunity to sell their house and exit the pandemic era rock bottom mortgages. Now, the point of conflict arises when the second effect outweighs the first. Some analysts believe there is a group of pin-up sellers who would like to get out of their current mortgages, but are trapped by the current elevated level of interest rates. Should the sellers substantially outweigh the buyers, prices could fall as a wave of housing supply is unleashed on the market when rates start to drop. Now I'm going to tell you guys what I believe is going to happen. I think the government is going to continue to try to prop up the housing market and the economy, specifically by ways of the reverse repo market, which is a tremendous amount, about $600 to $700 billion of liquidity sitting right there. Plus they have about $700 billion in the Treasury direct account. But once those things go bye-bye, and some people are saying it's going to go bye-bye by February, the reverse repo market, everything goes out of whack. Okay. And that's when we see big problems in the market, like the CRE meltdown. I think everything is going to get started now that the dust has cleared a little bit from commercial real estate. I think commercial real estate meltdown is the domino effect leading to unhinged unemployment and leading to the recession. And honestly, guys, none of this was necessary. The problem was we were in quantitative easing for too long. Now, I suspect it's either going to be in 2024, potentially in 2025 because of the presidential election. But I think we're going to be in a situation to where at the same time, we see rates go down significantly. I'm not talking about these electoral quarter basis point hits. I'm talking about big rate cuts because something is broken. I think we're going to see at the same time interest rates go down as home prices go down at the same time. And that is what I've been preparing for the last year and a half. And that's why I've been making these home buyers courses, because as we're waiting for that to happen, we need to put ourselves in a situation to embrace the recession. I've had to already take hits. Okay. A lot of people are going to have to get through unemployment. I myself had to get through that in 2023 and into this year as well. My wife, unfortunately. And the company I stepped down from shut its doors as well. So there's a lot going on. We see it Google, Amazon, Walmart. I mean, the layoffs are everywhere. And don't forget, you guys, we had 1.5 million full-time jobs lost in 1 month in December. 1.5 million. The only time that happens is when we're already in recession. So think about this. We're not even in recession. We're not even in the front. We don't even have unhinged unemployment. So what happens when we go into recession? I think it's going to be real bad, guys, because there's so much greed. There's so much corruption. There's so many people trying to sustain the prices of all these assets. It's going to blow up in their face, just like the GFC. It's shocking to me that they continue to kick the can down the road. The housing market is going to crash. And I hear people saying, oh, Travis, you've been wrong. You've been talking about this for 3 years. You guys, I started 2 months before quantitative tightening. I haven't even been talking about this for 2 years yet. But that doesn't mean, even though my forecast was off, it doesn't mean I'm wrong. All it means is I haven't yet been proven right. And I know exactly why. If the government's going to continue to do bailing out, it's going to be a problem. It makes the problem worse. It's going to kick the can down the road. And that's what we saw in 2023. Change my mind. You can't, because that's what the data says, guys. All I'm saying is, okay, be cautious. Work on the solution. Empower yourself. Credit, income, asset. Don't buy in to the fear of missing out. The doomers, the fear, uncertainty, and doubt, you guys, that's coming from the realtors. That's them saying, if you don't buy now, you're going to miss out on an opportunity of your lifetime. Home prices only go up. We need to get our priorities straight, and we need to be careful on who we're listening to. I believe in listening to all perspectives. I don't want us to live in an echo chamber, but I do want us to remain cautious, because this is a rare time in the economy where it's grounds to. And other than that, I really hope you guys got some additional value, insights, and perspective. And if you're out there investing in real estate, you guys know I wish you luck, and I hope you win.